Hello friends, I am Dr. Shamsuddin. I welcome you financial accounting classes. In this class, I am going to discuss questions and answers relating to royalty accounts. Let us begin the class. What is a royalty in business terms? Royalty is the compensation paid for the use of specific rights, assets, or resources. What is royalty in accounting? Royalty refers to a payment made by one party, that is lessee, to another party, that is lessor, for the use of assets, often intellectual property or natural resources. What are the types of royalty? There are different types of royalty, including intellectual property royalty, royalty paid for using copyrights, patents, trademarks, etc. Second one, mineral royalty. It is paid for extracting minerals from land. Third one, oil and gas royalty. It is paid for extracting oil and gas resources. Who is the lessee in a royalty agreements? The lessee is the party that pays royalties for using the rights or assets. Define lessee and lessor in the context of royalty. The lessee is the party who pays the royalty for using the assets, while the lessor is the party who receives the royalty payment for granting the rights to use the assets. What is the minimum rent in royalty agreements? Minimum rent is the guaranteed minimum royalty payment specified in the agreement. Minimum rent is a fixed amount paid by the lessee to the lessor, irrespective of the actual revenue generated from the asset's use. It is also known as dead rent. How are royalty payments treated in the books of the lessee and lessor? In the books of the lessee, royalty payments are treated as expenses and recorded in the royalty expense account. Short workings are recorded as a liability. In the books of the lessor, royalty income is treated as revenue and recorded in the royalty income account. Short workings are recorded as an asset. Journal entries for royalty transactions in the books of both the lessee and lessor. In the lessee's books, debit royalty expense, credit cash or bank for royalty payment. In the lessor's books, debit cash or bank, credit royalty income for royalty received. Explain the process of recoupment of short workings in royalty agreements. Recoupment of short workings involves offsetting future excess royalties received by the lessor against the previously recorded short workings. Once the short workings are fully recouped, any excess royalties become a revenue. What are short workings in royalty accounting? Short workings occur when the actual royalty paid is less than the minimum rent. It represents the difference between the minimum rent and the actual royalty paid. How is short working recouped in royalty accounting treated? Short workings are typically recouped from future excess royalty payments when actual royalties exceed the minimum rent. What is the accounting treatment for lessee and lessor in royalty transactions? For the lessee, record royalty payments as an expense in the profit and loss account, debit royalty account, and credit bank or cash account. For the lessor, record royalty received as an income in the profit and loss account, debit bank or cash account, and credit royalty received account. Example of journal entries for royalty transactions for a lessee. Royalty expense debit bank or cash credit. Short working debit bank or cash credit. For the lessor, bank or cash debit royalty received credit. Bank or cash debit short working received credit. How do royalty account benefit business? Royalty accounts help businesses track and manage royalty payments and receipts. They ensure accurate financial reporting and compliance with contractual agreements. What is the importance of understanding royalty accounting? Understanding royalty accounting is crucial for both lessees and lessors to ensure proper financial management, fair compensation, and compliance with legal and contractual obligations. Thanks for watching. Jnanameva Jayate. Jai Hind.